If you're a business owner, the potential sale price of your business is creeping towards $6 million or beyond. I think you need to pay very close attention, because once you cross certain thresholds, the tax implications can be massive. And so what do I mean by this? A lot of business owners create their business not for the intention of sale, but it naturally happens time after time. I see it all the time where business owners create this business for themselves, but then it ends up being such a valuable business that someone offers them a certain amount, and it would be silly not to take it. And this also takes into consideration those that are looking to retire in the future or scaling businesses quickly to flip them. And so you need to look at this and plan for it really far ahead so that you don't pay the tax office more than you should. And here's the reality: selling your business for millions, I guess it's an incredible milestone. It's incredible to be able to get to that point in the first instance. Without the right planning, what we've seen time and time again is that the ATO will take a big bite of your hard-earned wealth. We're talking maybe hundreds of thousands, even millions in unnecessary tax paid if you do not plan now. I'm a big fan of always talking about setting up your business as if you were going to sell it. And so that doesn't mean systems and procedures. It doesn't just mean team structure. It doesn't mean the model itself. It also means looking at your tax consequences. Set it up as if you're going to sell it, because if you do that, then it's going to allow you to keep more of the hard-earned cash in terms of the sale in your pockets rather than the ATO. One advanced strategy that could save you a significant amount of tax is something that we like to call, in simple terms, cost-based freezing. In the simple version, your cost base of your business is essentially what the ATO thinks you paid for your business or your investment in that business, right? Most businesses that we come across, they've built it from scratch. So essentially, they've come into this business and they've paid $0 if they were to sell it for $5, $6, $7 million down the track. The difference between your cost base being zero and the amount of sale, let's just say it was $6 million, you have made a net capital gain of $6 million. How do we decrease the gap? Right? So the $6 million point is very important, as well as other factors. But in this strategy, what we're able to do is try to restructure in a way that not only helps you to extract money from the business or protect assets, but also it allows you to increase the cost base so that at the point of sale, let's just say down the track, if we were able to solidify a cost base of $3, $4, even $5 million, and then you end up selling for $7 million, the difference or the capital gains will only be assessed on the difference. So if it was $7 million sale, you had a $5 million cost base, you have a $2 million capital gain rather than assessing it on a $6 million capital gain. How do we do it? Essentially, this is, I guess, strategic advice that you would get from an accountant. We would sit down with you and have a look at what your business is valued today. We would look at other certain circumstances and aspects that need to be triggered so that you're eligible for these concessions, basically. And then we're looking at the best case scenario. If you were to do this, how much tax are you going to pay today, and what is the opportunity of tax savings later? In some cases, there are ways that you can actually get out of this completely, where we solidify a cost base and you don't have to pay any tax at all by moving some of that money into superannuation or using certain CGT concessions. Let's say, again, for argument's sake, that your business is worth $5.5 million now and could sell for, let's say, $10 million in a few years. Without freezing, you paid capital gains tax on a very large amount if your cost base originally was zero. So on a $10 million sale, you'd be paying capital gains tax on that whole amount. And at that level, you may not be eligible for further discounts. Now, with a properly structured freeze, restructuring, let's say, the shares or who owns the shares, we could effectively reset your cost base to, let's say, as in this example, $5.5 million. And so we shield that future growth from tax, and we also allow you to have this, I guess, or extract some money out of the business already with minimal tax outcome. So if you are foreseeing your business as if it is going to be sold down the track and you're going to make a significant gain, talk to an advisor. Contact us if you like, but you want to start timing it so that you can plan and that you have the right structure. And so I would usually recommend that you're doing this 3 to 5 years out from actually selling.